All right. The question everybody has is Bitcoin going to go on a run? We've seen a good bounce back from the low around 74, sitting at about 97. Today it's Sunday, May 4th. May the 4th be with you. We're sitting around 95. So the question is there going to be a bull run? And what we're going to do today is we're going to dive in. We're going to look at several different indicators. We're going to look at both the potential performance of Bitcoin and the potential performance of MSTR, and really see how wild or uneventful this could be. So at a high level, let's start with some predictions that I've laid out earlier. I have said that I believe Bitcoin will go to about 265,000 by October. You're going to see whether I'm pivoting off that or not in this discussion today, and we're going to look at a bunch of charts, and we're going to dive right in. Okay. So at a high level with the Bitcoin cycles, right, you've really got four phases, right? So you've got the accumulation phase. This is after a halving. People are buying it back up. You got the early bull phase, post-halving. These are kind of stealth moves in the marketplace. Then we get to a parabolic growth phase. Media hype, retail enters. A little different this time around. A lot more institutional buyers. And then you get the blow off top. Okay? And so right now we're asking, are we going to see that blow off top? And then obviously after that we go into a bear market, right? Typically. Where we are right now is we're early to mid, I'd say mid for sure, a bull phase, right? After the post-2024 halving. If Bitcoin performs like it's historically performed, the next major move is a parabolic upside, okay? And we've got a coiling going on of a lot of tailwinds. There's some headwinds, but a lot of tailwinds, and we're just coiled up, ready to make a move. So what does that move look like? Well, why don't we make it simple? Why don't we go ahead and we're going to take a look at some charts and see what could happen here. So, as you've seen in the past, one of the charts we look at on a regular basis is Bippo, okay? Bippo is a great resource for charts. A lot of great resources out there. I like this one in particular. We're going to start with the Bitcoin power law. Now, I've discussed a lot of these in the past, so I'm not going to give so much definition behind these charts, but we're just going to dive into like what we're seeing here today, okay? So if we go back and we look at 2013, okay, or actually let's do this. If we go to back here, you can see once we cross this green line, this is that linear regression fit, we went on a strong run, right? Now let's go to the next one, the next cycle. Once we cross this green line, we came up, we came down, but we stayed above this green line for the most part, right? Now, when we get to the next cycle, let's zoom this in a little bit, okay? Give me 1 second here. We're gonna zoom this in a little bit. You can see we got above, right? We got above this green line a little bit, dipped below, and then when it came back, we went on a run, okay? Now this wasn't the halving cycle. This is kind of that back end. So the next one, right? Once we got to the linear regression line, we ran up. Where are we right now? Well, we're right here, okay? And guess what we haven't really done yet, and guess what we're flirting with, okay? Right here. You see we have flirted with it, we've kind of touched it, but we have not released above this line. We've not gotten above these all-time highs that we already saw. Those ran up dramatically when Trump got elected and into office. They ran all the way up to 109. You can see, obviously, 100 is going to be a resistance level just because it's a round, even number. Psychologically, 109 is going to be resistance. You can see here, when we start getting above this 113, 115, 120 range, if we zoom back out, this thing's going to go way up and fast. Look at all these. Every time it's broken above that linear regression line, it's been that parabolic phase. And it sure looks like that timing is coming up. Okay. Now, the next question is, okay, well, how high is it going to run? Let's go back to that. You've heard me say before, and there's some other charts we're going to look at. I don't know if we're going to get all the way to the resistance level at the top. If we go out to what I believe is going to be about October. Oh, sorry, we gotta zoom this in here. Where is the dates? October, no, 25, October. There we go. Let's go right about there. 481. Now you've seen Josh Martin on X. What was his number? 444 is what he said. So this is within the range that he's proclaimed. He called a price point to the day in the past, and so he's kind of seen as this prophecy. And one of his predictions, other future predictions, is that we'd reach $444,000. Could happen this cycle. Wild. I personally believe, I keep saying it, I believe we're going to be about 265 in October. And if we go to 265, I mean, I know it's kind of hard to see on this chart, but that's not getting anywhere near this resistance level at the top, because you can see here, if you look at back at the history, Bitcoin has done a pretty amazing job of staying within that support and resistance lines. There you go. This is not, there's been no 4-year cycle where we haven't popped above this green line and sustained above it for a period of time in any halving. Okay, this could be the most wild and uneventful 4-year cycle ever, or we're going to see this parabolic run happen. Okay, and based on history, that's what we can expect. Let's go to the rainbow chart. This is very similar. This is going to give us an idea, again, historically, where we ran in these highs to the orange level. We popped into the red. We got into the orange. Okay, these halvings, and even let's take a look at this. Okay, in closer detail. Right now, Bitcoin is saying this is a great time to buy. I mean, literally, we're in the blue. We're barely in the green. Right now, if we go again, let's go to October of 25. Okay, here we go, October of 25. If we go to the yellow, we're at 212. If we go to orange, we're at 290. I think a 212 to 290 number is realistic, above 200, because let's zoom this out again, okay? And let's take a look. Right here. What we're seeing is that in all of the previous cycles, okay, even in 2011, okay, fine, we got into the yellow a little bit. Over here, orange, red, orange, okay? So we're living within this worst case scenario, yellow to orange range, okay? So even if we just dip into in this yellow range, it could run to $200,000 easily, right? You get into the orange, and now we're 250 plus, okay? That's how it's worked in the past. Let's see how it performs again, okay? So those are ideas of the potentiality of where this could run. Now, let's take a look at the relative strength index. You can see here, if we go back, it got all the way up to 100 in a previous cycle, okay? Let's go to 2017. We got up to 96. Now, 2021 was a little bit reserved, okay? There's FTX stuff. There's a lot going on. We had the double top. 93, okay? These are on the 90 ranges. Where are we today? 66. We're not close to where any of the previous halving, or the 4-year cycles, have topped out. We've got runway, okay? That's another one saying there's more to come. Same here. You can take a look at some. Let's go to a different one. I like this one. All right, this is the pi cycle top indicator, where you're gonna look. We're gonna go back and we're gonna look at these where these lines cross, right? The 350-day moving average times 2 versus the 111 days. So the long term versus short term, okay? And when they cross, we typically hit a cycle peak. Okay, let's go to another one here. 2017, they crossed. That was the peak. We go to 2021, they crossed. That was the peak. We are nowhere near these two crossing at this moment, okay? They're actually diverging, which means we're coiling into a breakout, okay? And you can see here, this is a great time to buy anytime we were below this line, okay? And we're barely above it. So there you go. When these two start to converge, that's typically when we're at the peak of the cycle. Plenty of runway there. Again, take a look at this. These are kind of those indicators of where we're at. We're nowhere near any of these historical peaks. Let's go to another one. Very similar. I'm just going to keep moving through these. When we get to the red, okay, that is a peak. We've seen it. Here you go. 2013. What do we got? 2017. Again, that 2021 was a little bit more reserved. We got right around this red zone. We are nowhere close to it. Plenty of room to run. Nowhere close. This takes a look at kind of the other cycles, blah, blah, blah. I'm just going to cycle through some of these real quick. You get into kind of the gist. There's a lot of different resources available. If we look at this, the past cycles have gotten to the blue or above, okay, with these lines. We are nowhere near blue. Look, if we run this out until October, well, this one's right now going to, let me refresh this one. Can we get it out there further? This might be as far out as we can go. It's fine. You get the gist of it. If we run this all the way out to, this is, yeah, I guess this is real time, so yesterday. Right now, that blue line is saying 235. Okay, if we get to that like we've done in the past. So right here, if we get the release that we expect and this thing runs, you can see the potential pricing. So then the next question comes, what could cause this thing to run? Okay, and that's what we're going to take a quick look at here. So one of those things is the more money that enters the market, it will get released into all sorts of assets, not just Bitcoin. It'll go into the stock market, it'll go into real estate, it'll go into gold, it will find its way into Bitcoin. This is a lag. There is a tight correlation between the global M2, that's how much money is being printed and it is in existence, okay? You can see we were in a tightening phase. The global M2 is usually leads Bitcoin price by about 108 days. Right here, we're looking at a chart that shows the M2 money supply has been increasing, and it has after 128 days lag. So this is March, April, May. I'm just making this up, right? But this is a little dated of information, but you can see here we're in this zone. We're in this low part of the zone where this is about to release. The more money that is circulating, it will find its way into all sorts of different assets. Bitcoin obviously being one of them, and that is a growing trend. This right here, let me move this, is telling us, this is one of the indicators that we're about to see a run happen from a timing standpoint. Bitcoin versus gold, again, similar things, 90 to 180 day lead. The reason is gold is more established. It has 2,000 years of history behind it, and when we have a hedge, when there are tariffs, when the economy is kind of being faulty, the money is going to go into these safe havens. Historically, Bitcoin has been viewed as a risk-on asset. It is starting, the dialogue and the thought is starting to switch to, this might actually be a safe haven, because you've seen the decoupling from the stock market. It used to trade like the NASDAQ. It's starting to decouple from that. Money has flowed, and gold has actually outperformed Bitcoin in a long time, and it has been on a run. But there is a lag, okay? There is a delay. And as that money finds these safe havens and the adoption rates continue to rise, more and more money will find its way funneling into Bitcoin. You can see that this chart follows similar paths, and what has gold done? It has gone on a major run. If this chart follows the path that it historically has, there's a major run. These two things are lining up. M2 money supply, the safe haven, the lag behind gold. This is all coiling into something very big and intriguing. Okay. Now, let's go to one of the other indicators that we've looked at. Now, this one's a little different only because this is more of a retail play. I don't believe retail is going to drive the run up. I do believe retail will push us over the top, and that will cause the blow off top to happen. There's just going to be money flowing in. I do believe the run up is going to be a little more subtle, I don't know about quiet, but I think it will surprise a lot of people because there's going to be a lot of institutional money. There will be countries and more sophisticated individuals coming into this marketplace, and they have the ability to buy OTP, or they have the ability to buy in different ways that aren't as visible, right? So anyway, with this, one of the indicators is that when Coinbase hits the #1 app in the finance category, that's the blow off top within 2 weeks. That has historically been the peak. We're at number 20. We're climbing up, but we're not near #1. There's more runway to go. Okay. Now, I'm going to circle this back to MSTR, but there's something I want to hit on as well. Okay. And this is a really cool, I saw this, I don't remember which, you can probably tell from the nut thing. But anyways, this was a quote from one of the news articles or newsletters that I subscribed to, okay? And in this gentleman, Hunter, I'm just going to read it, right? Institutions are here, advisors are here, corporates are here, nations are stepping in. This is so different than any of the other past 4-year cycles, which were driven primarily by retail. These are very sophisticated, very large buyers. This isn't your uncle buying $500 worth of Bitcoin, okay? This is this is strategy saying we're doing another 21 billion in purchases of Bitcoin, right? You've got GameStop. You've got Senator Loomis put together a plan to buy 1 million Bitcoin for the United States, okay? The advisors are here. You've got BlackRock. You've got the big boys talking about it. Obviously, the corporations are here, and there's a lot of talk about sovereign nations starting to buy Bitcoin quietly, okay? Again, different cycle. These are billion-dollar buys, and that's what has to happen to have these run-ups. As the price gets higher and higher, it can't just be these retail purchases when you get a few extra bucks. It has to be huge institutions and huge purchases in the billions of dollars to move the needle, right? To go from $10,000 to $20,000 takes a lot more capital to go from $100,000 to $200,000, and we're starting to see that capital filter in. So why it matters. This isn't a retail-driven sugar high. I agree with this. This is a structural adoption. That's what's so amazing about this. A structural adoption. There's more eyes seeing that the fiat system is broken and there's not a really good solution anywhere other than a neutral reserve currency, and you have two options. You have gold and you have Bitcoin. And what can you trust more? How much gold is in the Federal Reserve? They haven't done an audit in 60 years. How much Bitcoin is there? Every single node, any computer, you can access and do an audit yourself any point in time. We live in a digital world, okay? Anybody can buy this. Go to El Salvador, go to Africa, pick anywhere. Go try and buy gold. Where are you gonna go? It's not as easy as you. Yeah, there's ETFs, but if you try and buy physical gold, it's not the easiest thing in the world. Anybody with a phone can buy Bitcoin. Okay, off of the layer one, like actual Bitcoin, right? And you can store however you want. So there's big money moves slower. It moves quieter, and here's what I love about it. But when it moves mountains. And we're just getting started, okay? We are early. So if you got into Bitcoin in 2011, 2013, 2017, If you got in 2013 earlier, you were very early. 2017, I still say is early. 2021, that cycle, maybe you're a little past the super early, but you're early. We are literally institutions. This is like buying in 2011. That's my comparison. This is the same as a retail person finding Bitcoin in 2011. What was the price? I don't even know. $100, right? That's what this is like at the institution level. This is where we're in inning one. That's where this thing gets wild. Okay, and I think it's gonna catch a lot of people off guard when this really runs, and the FOMO will kick in very hard because the writing's been on the wall, and the people see this thing go on a run, and they're not gonna know what to do. They're gonna have to dive in. So let's take a look at MSTR. We talked about the potential here, and so let's dive into this a little bit. If we take a look at, let's just say we saw anywhere from 200, I'm going to go up to 265, okay? What we're taking a look at is this is historically plotted out, and then there's a linear chart across it of where the MNAV is. So obviously MSTR is a leverage Bitcoin play. There's a reflection of the price, but you get through that leverage, there is the MNAV, right? The premium on it. This is charting the price of Bitcoin relative to what the historical premium has been, okay? So if we run this all the way out, okay? If we run this out, so I've got a set of 300 at the end here. So if we run this out, let's say to 200,000, okay? What we're looking at is a Bitcoin price of 1,500, okay? What are we at now for, what did we close at? We're at about 400, okay? So you're looking at 4x? That's wild. Okay, now let's go to 250. Let's have a little bit of fun here. We're going to 250. Get this up there. All right, at 250, okay, we're looking at $2,200, okay? That's unbelievable. When we're sitting at 400, right? Almost 6x return. Let's go to the 265 that I keep talking about. Right here, $2,500. That's life-changing, okay? And that's where the leverage plays come in. So what do we have? What are some of the tailwinds? What's coiling this up, but what's holding us back? What needs to release for this thing to run, okay? So we got a little list here. Why don't we pull this over? We're going to take a quick glance at it, okay? So what we are looking at here, okay, is here. Let me move this over. We had old AI walk us through some of these things. Comprehensive list of tailwinds, okay? Institutional adoption. We saw this a couple years ago, right? When the Bitcoin ETF approval came in, and we've been seeing strong inflow since then. The number one top performing ETF ever from when it got introduced, okay? Corporate Treasury, MicroStrategy, Tesla, Block, etc. Corporations are getting in. Traditional finance, pension funds, major banks, they're now allowing banks to start to trade this. That's a work in progress. Monetary policy, okay? Global currency debasement. We've seen more money printing since 2020 than we've seen in the history of the world, and inflation is going up. As inflation goes up, asset prices go up as well. You want to be in the most volatile asset because that means as the stock market does 24% or 23% like it did the last 2 years, you've got Bitcoin doing multiples above and beyond that, right? There's debt concerns, right? Regulatory clarity with the new administration. Game on. Literally, the administration said we want to be the Bitcoin capital of the world. That's a different angle than Gensler's been talking about the last 4 years. Cracking down, debanking companies, crypto companies. I mean, that has shifted dramatically, okay? And it sets a tone, not just in the United States, but for the world, right? Supply dynamics. Well, obviously the halving is big. The limited supply. There is no other asset that is as finite as Bitcoin, right? Network effects, we're starting to see this, okay? And we're going to get into game theory that once these nation states start buying it and these corporations are dominating other corporations, you start to go, this is table stakes. I have to play in this game, otherwise I'm going to be left behind, okay? Technological development, demographic shifts. Yeah, what you're going to see is the greatest shift of wealth ever in the United States as baby boomers end of life, right? It's real. That money will transition to their children. And those individuals are more comfortable with Bitcoin, I'm confident to say, than boomers. And that wealth likely will find its way into crypto and Bitcoin in particular, right? Global adoption trends, emerging markets. As other countries have crazy deflation, how do they protect themselves? They buy Bitcoin. It's happening all the time. Market structure improvements, 24/7 trading, love it, right? Options trading. You've seen MicroStrategy, you've seen strategy come up with so many different, you've got MSTY. That's a very creative income approach. You've got the MSTR. That's a leveraged Bitcoin play. All of this stuff. Geopolitical factors. I think this is one of the biggest one there possibly is. The de-dollarization trends globally. Other countries aren't trusting the US dollar and the inflation that we've caused, and they're moving away from it. And as they move away from it, we're going to have to print more money, and these assets are going to run like crazy. So anyways, you can see this whole list. These are the things that are happening. Right now, there's uncertainty in the market with the tariffs. I believe that's holding all assets back. And what I believe is that this is going to be a situation when that starts to get resolved, it's going to be release of the brakes. We're putting brakes on the economy. This isn't something that there was cracks and things and we were just setting up for a bad market. No, this was a chosen choice to put brakes on the economy. And when you release the brakes and that engine's purring, it's going to want to run. And so I see that being a huge thing is when that gets squared away, I see all markets going on a run. And I see Bitcoin, when it can break through some of these resistance levels, it can melt faces here, okay? So let's do a quick recap. Looking at the charts, we are nowhere near the peak. We are just sitting at a point where we're ready to have a breakout, right? You can see it in a lot of these charts. We're just coiled up, ready for a breakout, okay? Now, we could coil up more if trade or some sort of new insights come out. We could coil up even more and the price could pull back. But when the brakes finally get released, I think this thing is ready to move, and it's going to move quick, and it is going to surprise people who haven't been paying attention. And things like MSTR, people's minds aren't going to, they're not going to be able to comprehend a run from 400 to potentially 2,200, 2,500 in a matter of 5-6 months. When it starts to make moves like that, that's when the euphoria happens. I also do believe people talk about getting into this super cycle and we're not going to have the same lows. What I see is I do see big drawbacks, but I see this thing running so high that the drawbacks have to happen because the FOMO is going to be so high. But if you go to 265 and you come back to low 100s, and that's the floor, and then your next run is in the $4, $5, $6, $8, $900,000 in 4 or 5 years, so be it, right? So that's my take right now. I'm sticking with the 265K Bitcoin price in October. What I anticipate is when the tariffs get resolved or there's more clarity, I could see everything going on a run. They also talk about sell in May and go away. You get a lot of traders, a lot of people on family vacations in the summertime. So we could see this kind of boring cycle through May, June, July, August. When we get into the Q4, September, October, that's when this blow off top could be happening. So give a like and subscribe below. Let me know your thoughts. Is this way off? Do you still feel confident that we're going to go on this wild run? What do you think is going to be the trigger that removes the brakes and lets this thing run like crazy? Let me know. Again, thank you. Stack those stats and stay sovereign.